Hi, I'm Christian Gopal here with Louise Street to talk about the full year 2023 Gold Demand Trends Report. So Lou, 2023 is over and we have the annual numbers. It really throws up some interesting stories. What can you tell us?
Yeah, so gold was one of the best performing assets globally last year, and that price strength was really a major contributor to it was central banks. So this time last year, we'd had a record year of 2022 buying. We didn't think we were going to get close to that again this year, but we really did. They nearly matched the record, another consecutive year of over 1,000 tonnes of buying by that sector, and that was instrumental in driving that price strength in gold. We know that central banks favour gold for its performance in times of crisis and its role as a store of value, and that seemed to very much continue to drive the interest in gold in that sector last year.
Now, looking at numbers, we also saw a pickup in OTC investment. What can you tell us there?
Yeah, so OTC demand is that kind of off-exchange private transactions that happen between two counterparties directly. So from that perspective, it can be a bit more difficult to get a real grasp on. But what we do know for certain is that it was significant. And again, that was what contributed to the price strength in the year. And we know that much of it came through in the second quarter, where we saw some real strong interest in some high net worth buying and kind of stock building in certain markets. And Turkey was among the key of those.
Now, despite the robust price performance in gold, we continue to see outflows in ETFs over the year.
Yeah, they saw quite significant outflows, nearly 250 tonnes. We saw some pockets of strength. Asia saw continued inflows into Asian-listed funds, but North America saw some fairly hefty outflows, concentrated mainly between sort of June, July and October, really a reflection of the monetary policy environment. We saw the Fed taking the fight to inflation. That was reflected in higher interest rates, higher treasury yields, and in some investors' minds, that's can be negative for gold. But the biggest region of losses was Europe. They saw around 180 tonnes of a drop in holdings, which was interesting because that also very much reflected what we saw in the investment on the bar and coin kind of individuals investor side.
So on that, in terms of European bar and coin investment, it did indeed have a challenging year. What were the reasons behind that?
Yeah, so bar and coin globally actually was pretty strong. It was down about 3%, so around 30 tonnes from 2022. But when you look at kind of the distribution of how markets performed, Europe was the standout. There was a really, really steep drop, with much of that accounted for by Germany. And there was a few things going on there, as well as the sort of the general cost of living pressures that everyone was coming under. They saw interest rates rising and suddenly turning actually positive in real terms for the first time in quite a while. So you saw not only were mortgage repayments becoming a bit more burdensome, but savings accounts were now more competitive. So people were actually earning a return if they were to put their money in the bank. And then the other big contributor in Germany was energy costs. So energy bills are reset once a year in Germany, and the step change in those costs from the previous year and the year before that was really significant, again, really squeezing household budgets and having an impact on gold investment. But we saw that sort of weakness in Europe actually offset by strength in a couple of other markets, notably in the East, and we tend to see that quite a lot in the gold market, where Western and Eastern investments are kind of pulled in opposite directions. They tend to offset each other, and it kind of gives gold investment this self-balancing nature.
And sticking with the consumer-led elements, jewellery. Now, we've picked up on you talking about the economic challenges and the impressive gold price last year. How did that play out in the jewellery space?
Yeah, well, you'd expect it to have a really negative impact on jewellery demand, but actually it was very resilient last year. It was virtually unchanged from 2022, which, considering what was happening in the price and global economy, as you say, is really robust. Now, admittedly, much of the strength was coming through in a couple of quite specific markets. So China was the key one, and demand there was being compared with a very weak base period. 2022 was really tough for China with the COVID lockdowns and then the spread of COVID later in the year. So it wasn't surprising to see strong growth there. Turkey was another one, which was dealing with its own sort of quite specific socio-political issues, and it's very much a quasi-investment market because jewellery is such high carat. But even so, when you look at other big markets like India, it was only down 6% year on year. And when you consider that the rupee price just kept on making new record highs throughout the year, that was arguably a really strong result. So overall, jewellery was very resilient last year.
And if we turn to the supply side, what can you tell us about the key stories there in 2023?
So total supply of gold was up slightly year on year, and that was due to positive growth in both gold mine production and recycling. We had thought we might see a new record year in gold production, but we stopped just shy of the 2018 record. Recycling growth, again, coming through because of a reaction to the gold price, but arguably, given the strength of the gold performance, didn't grow as much as we might have expected.
That's fantastic. Thank you, Lou. If you'd like to read about all of our gold demand trends insights, you can find the report on goldhub.com.